Good evening and welcome back to Be Rich. Today I want to talk about Tesla because Tesla's results came in yesterday. Tesla beat estimates. The estimates expected that they would make a profit of $1.9 billion last quarter. But actually they made $2.2 billion profits, up from what they did at the same time last year. But what was notable is quarter on quarter, their profits have been increasing. In the previous quarter, March, they made a huge profit of $3.1 billion. And the profits this quarter is much lower than that. Also, prices in Tesla have been increased for all their models of cars. This reflects huge surge in input commodity prices. This has meant that the prices of Tesla car have also gone up. In spite of rising prices, the number of Tesla cars that have been delivered have declined, and therefore there's a slight fall in the revenue of Tesla. Most of the problems in Tesla's stocks, shares, delivery has come from supply chain problems in China, where Chinese factories, because of their COVID lockdowns and zero COVID policies, have not delivered. Also, Tesla's factories in Germany and Texas have not yet started to deliver fully. All this has meant there has been critical supply side shortages on Tesla's products, and this has led to a decline in sales and profits. Also, it is quite possible in the coming years, traditional car manufacturers will start to turn their attention on electric cars and will start to make a dent, because Tesla represents the higher end side of cars. That is, Tesla primarily sends high end cars, high end electric cars. The low and mid level is where the big market is, and if a large company comes in, it could spam Tesla. Tesla is barely making profits, and this is what Elon Musk himself has been saying, that its profits can be hit like sledgehammer hitting a cake, and the profits could vanish. And so every dollar saved is very important. At this point of time, when such a critical juncture, what is happening to Tesla is that the cost of its inputs are going up and has to be passed on to its customers. Whether the customers in coming years will continue to buy Tesla, even if the cost of making a Tesla keeps going up, that is something we need to watch for. But now it is quite clear its profit growth has stalled, and it is not going to make profits as much as it has done before. However, Elon Musk is confident, and he says that there are two giant factories he is building, one for batteries, another for components, one with tie-up with Panasonic to make batteries. And these giant factories will be money spinners, and company will continue to make huge profits, and profits will grow. While all this is taken in face value, the fact remains that the owner of Tesla has been rather eccentric and is prone to making big statements, which is sometimes not palatable. Some of his actions are impulsive and does long-term damage to the Tesla brand. His backing of cryptocurrency and playing a role in creating Dogecoin has not gone well with the crypto world. Already, an individual has filed for a class action suit saying that he misled people into buying Dogecoin, which has really created problems for a lot of retail investors who believed in him and bought Dogecoin. He further stroked it up by saying that he would accept Tesla payments for Tesla in Dogecoins, and later did a U-turn. He also did a lot of heavy lifting for Bitcoin and other cryptocurrencies, and he did several tweets which the SEC felt was in breach of the regulations laid out for a publicly listed company. But SEC did not really act against him and was very light. All this meant that Elon Musk thought he could get away with whatever he wanted. He suddenly decided that he wanted a new toy and decided to buy Twitter. He took a nearly 10% stake in Twitter, 9.5%, and then disclosed it. The board of Twitter offered him a seat on the board so that they could discuss the future of this company and see how this company could be taken forward. Elon Musk dismissed this, said that he is not interested in running Twitter and he does not want a board seat. But within a week of saying that, he did another U-turn. He said that he will buy Twitter all out for cash. The price, he said, in excess of $50 was a big premium to existing market price. It was nearly 20-25% above the market price. And then he realized organizing money for that would be difficult. Even though Tesla's owner Elon Musk is considered one among the richest men in the world, most of his money is derived from value of his stock holding in Tesla and SpaceX. He has very little liquidity which he can dispose. So even to pay for his long-term capital gains, he had to sell a portion of his stock. Therefore, it was a wonder that how he would raise $44 billion to pay for Twitter. He sold some stock, he had some cash, and he organized a loan from JP Morgan for the rest, saying that he would pledge a large amount of Tesla stocks. Unfortunately for him, what happened is the tech bubble burst at the wrong time and the price of Tesla stocks started to correct. It fell from a high of 1,240 to nearly 740, a loss of $500 per share. Even today, at current prices, the stock is highly overvalued, and it is quite possible as the Federal Reserve continues to increase interest rates, the price of Tesla stock will fall further. When the stock fell to 742, the amount of shares he had to pledge with JP Morgan kept going up. Already, to invest in SpaceX and other ventures, he is already highly leveraged and most of his stocks are pledged, and therefore he felt he could not take risk in buying Twitter out fully. So he started making excuses which will not hold water, because as per norms, he had the right to examine the entire books of Twitter. He decided in his own wisdom not to follow it up and decided to waive the right. And later he said this deal cannot go through for the simple reason that Twitter had not told him how many fake accounts they have. This is ludicrous, because the first metric he must have asked when he was interested in taking over this company would have been how much was the spam accounts. So he went back and forth and then finally said, I am not in a position to buy Twitter, especially all the shares for cash. What Musk expected, certain big investors would stay by him and he not pay cash to buy those stocks. Unfortunately, that didn't work out. The Twitter's company's name was completely bruised and battered by the cavalier way that Elon Musk treated them, and their stock has now fallen to the mid to low 30s. So this has lost several $100 billion in market capitalization. This means that Twitter has decided it will sue Elon Musk in a court in Delaware. The Elon Musk pleaded for more time. Twitter asked for an immediate trial because of the implications of it. The judge has now granted an early trial. In the first week of October, the trial court will decide whether Twitter was right and whether Elon Musk can be forced to buy Twitter. Thank you for watching. Be rich while we wait patiently for the outcome of the judgment. If you like the content, kindly hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. At the very end, I want to thank you for your support of Be Rich. Thank you once again. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.